Hey guys, welcome back. It's been a while, and this is the reincarnation of the Hot Pot podcast. Been super busy for the last 3-4 months at least, so we haven't had much content coming out. But I'm here with or shares Bilal, and it's his show, so let's run on.
So it's the Hot Pulp podcast. So that was hard for me to say, but we're on location at HeathHillGreen Studios.
Yeah, more coming from here potentially.
So Jabir's been busy the last couple of months. He's been out living the life out in the Emirates and trying to find a wife.
Quite wow.
And anybody out here, then please reach out to us. We'll filter, and we'll go from there. No, thanks for having me on. It's been long overdue.
Yeah.
So the last time we spoke, and we've done some reels, we've done some Instagram content, but the last podcast we did was the accounting and associates bit. So I think the natural progression is let's talk about the business side of things, because that's what dentistry is. I mean, you're one of very few industries where you'll go through a strict regimented period of education. You've got your 1 year FD if you go through that route, unless you study abroad, and then
Don't bother, guys. There's better ways. There maybe isn't actually, but yeah.
But then you're dropped in at the deep end. So come September this year, or the 31st of August this year, you'll have a fresh crop of foundation dentists all becoming self-employed, and nobody's told them what they've got to do for that. That's all. They might have someone pop in on sort of a speaking day, engagement day, where someone comes in, or one of the other accounts practices comes in and says, "This is what you need to do." But how much are you really gonna take?
They'll have watched our videos, Bilal.
There is that.
That's all they'll have had, and they'll think, "Oh, these guys know what they're talking about," but I am still clueless. So here we are again.
But should we do a quick recap then?
Yeah, definitely.
We're going to the business side of things. So brand new associate coming in. You will have been an associate up until the 31st of August. So you'll have been PAYE, so employed. Your salary would have been paid net of tax, national insurance, and the like.
This is for FDs, by the way. So if you've been an FD, this is the situation.
And then from the 1st of September, assuming you've already got a practice to go on to, but really from the 31st of August onwards, providing you finish your FD year, you'll then become self-employed.
Yeah.
So there's a couple of things going to happen at that point. If you've got a student loan in the UK or anywhere really, you'll start getting letters from the student loan company, because the moment your employer in your foundation year switches you off, because they have to make a declaration to HMRC that says Jabir has finished his foundation year.
P60 or 45.
So P45.
45.
So they've issued a P45, that gets issued to HMRC, that then triggers something with student loans company. They start getting nervous and start saying, "Where's my money?" The little Stuart
Where
Griffin.
are you?
Little Stuart Griffin trying to hunt down his money. But in essence, where are you? And the letters they're strongly worded. I mean, there's a lot of loans out there that they want to make sure they get paid for. So there's a couple of things you have to do. You register self-employed. Dead easy. You could do it on HMRC's website. Couple of clicks. Yeah. What that then does is that sends you a unique tax reference number, so a 10-digit code that's unique to every taxpayer. You then have to give that to the student loans company. They then know to wait for your submission every year.
Yeah, and then you pay them as and when.
Correct. Your first tax year will run, as every tax year runs, up until the 5th of April. So 6th of April to the 5th of April the following year, with all taxes then due by the 31st of January the following year. So if you take that sort of foundation perspective, you'll have been employed for April, May, June, July, August, 5 months of the year. The remaining 7 months you'll be self-employed. So when you do your first self-assessment, you'll take the income that you earned whilst you're employed, add on the income and expenses you incurred whilst you were self-employed, put all of it together, come up with a tax number, deduct the tax you've already paid because you would have paid tax whilst you're employed. Balancing figure needs to be paid by no later than the 31st of January the following year. So if we just use a current time frame, we've got end of August 2022, and then from 1st September 2022 to the 5th of April 2023 is your first tax year.
It's not a full year, it's kind of like a half. Yeah.
It's 7 months prorated, and then your tax is then due by no later than the 31st of January 2024.
Yeah.
Tax, national insurance, and student loan repayment. So all of it happens in that perspective. And then within that period, you might have some associates wanting to go limited company, which we've talked about in detail. So
previous videos cover that. We've got reels on that stuff as well, and also 2 previous lives which we did over Skype.
Yeah.
So you can check those out on the YouTube channel, which will recap a lot of that stuff. And there's Q&As on that as well. So there might be questions that you're thinking of. Loads of stuff got answered there. Yeah. This is more focused today on which topics?
So planning. So it's a part of finance and accounting that I actually really enjoy. So I've spent the last decade pre-HeathHillGreen as a working in the corporate environment, and everything's based on planning. Because if you look at the tax cycles, they only ever tell you what's happened. So it's useless data, but you need to compile it to be able to produce your tax figures.
Yeah.
But if you're relying on someone else putting together your numbers to tell you what your tax bill is, you're not in control of your numbers.
They're missing things. They don't know certain things that happened.
Correct.
Etc.
And depending on your accountant, depending on the way they work, it might be a mad dash in December, it might be a bit earlier, but really let's use that sort of December. A lot of people do wait till December. It's frustrating. But so if you take anything from this video, I'm talking about kind of breaking the fourth wall here. Do not wait until December to find an accountant. Do it as early as possible because it doesn't cost you any more, and it will save you way more money in the long term. So that's that, and I'll go back to Jay. So if we look at sort of the general time frame, and let's use that December sort of
going on as our thing. Yeah.
So if your tax year went from and we use this time frame. So if we use April 2022, 6th of April 2022 to the 5th of April 2023, and you've waited till December 2023 to do something about it, not only have you missed that entire tax year's worth of efficiency where something could have been done, you've now lost most of the current year you're in.
Yeah.
So then if you wanted to make change to your tax strategy, it kind of becomes pointless by that period because you've only really got Jan, Feb, March left. And if you've already extracted the money, you've lost 2 years worth of efficiency then. And that can cost tens of thousands of pounds. To give you an idea, we had a client who joined us as an associate making good money, and we were able to knock off nearly £88,000 of his tax bill. And that's through legitimate legal. Now this, look, it's a free case, it's a headline rate.
Yeah.
But in normal circumstances, an associate making 50, 60, 70, 80,000 pounds a year, depending on how much money you need to live off, you could be saving nearly £10,000 a year in tax. So do you want to wait 2 years, or do you want to be proactive about it?
And so have that extra cash in hand to do whatever you want to do with it.
Well, exactly, and that really is a neat little segue to what we actually want to talk about today, which is planning. Which is, if you plan the next 12 months out, how much money do you want to make? What courses do you want to go on? What equipment do you want to buy? Who do you want to go and shadow? If you want to come to shadow my man Jabir here, who's just done his bed implant course, then
if you've got implants that need doing, I'm available now. So hit me up if you're in the Yorkshire region.
That's a nice little plug there. So
that's what it's all about. Drop it in.
If you plan that in, then you know what your year's going to look like.
Yeah.
And if we use that example that says, well, if I know I'm going to take 2 weeks to go shadow Jabir, I know how much money I need to live off. That then says, do I work harder running up? Do I work harder throughout? And just know that I'm not going to earn for 2 weeks in that year. Because the toughest thing that generally happens is when you go into that self-employed life is you get large sums of money in your bank account.
Yeah.
A third of which is not yours. And then
I'm taking half out sometimes.
It's fair, yeah.
Beer.
Yeah. Well, yeah, and we'll come back to that. Is a lot of people do that. They will overestimate how. So they will put aside probably 40% of their gross number and they ignore the expenses and just say that I'm just going to put it all away and forget about it. And then that's not my money, which is a safe way to be. But ultimately, if you plan the year, like I said, for the next 12 months, I'm going to spend £10,000 on courses. It's going to cost me £5,000 a shadow.
Yeah.
And you work out your cost. Shadow is I'm not going to be working for 2 weeks. I make 10 grand a month. I'm not going to be making that much money in there, so it's costing me £5 grand. I know I want to buy a set of loops, £3.5 grand. I want to buy a camera equipment.
Go loops are
pointless. I want to buy a camera, with a decent macro lens.
Yeah. It all adds up.
Correct.
Yeah.
And then you factor it all in, and then you think, well, have I got enough money to actually live off? And then, but if we can build all that in, that says the next 12 months, this is what we'll do, this is what we'll look like, and we know the data. We deal with hundreds of dentists. We know what those, and we'll sort of check you on it. Sometimes, well, you're being a bit unrealistic, or you're being a bit too pessimistic. We want to know how much NHS you're doing, how much private you're doing, and all of that. So planning it the next 12 months, we can then calculate what your tax bill is going to be. That says if the year turns out this way, you will pay £28,000 in tax.
Yeah.
So you already know your number, you've made peace with it. Then it becomes, well, I don't want to pay 28 grand in tax because I hate paying 28 grand in tax. Well, now you've got 2 options. Either make peace with it or go make more money.
Yeah.
Yeah. Work a bit harder, work an extra day. So that's the planning side of things, because by doing that, you start to learn certain things. Is if you work across multiple sites, which site is worth my time? What treatments are worth my time?
Yeah.
And is it worth, I don't know, you'll feel strongly about this, but you know what I'm about to say,
Yeah.
is should I be doing NHS or should I be doing private?
Yeah.
Yeah. But I don't opine on that, so that's very much it is.
That's I have strong opinions on that, which I'm sure you've all seen.
And then, but it does help because we start to understand whether some of the treatments you do, whether you do them because you like doing them,
or because it's lucrative,
correct,
or because it's all you're getting,
correct, and that's the first and the third, or the first and the second, are in your locus control. If you're fulfilling an order, then you're never going to be happy or fulfilled as a dentist, are you? If you're working in a practice that you don't want to be at, you have no control over your diary, you have no control over the type of treatments you do, you're going to feel unfulfilled.
Yeah, exactly.
And which is why it doesn't always have to come down to money. Now, whenever we do planning sessions, we always link it to a
personal fulfillment.
Correct, personal objective. And I'm brutally honest with this about anyone that knows me, and my practice is built around my kids.
Yeah.
Is if the practice grew to a point where I couldn't do the school run, couldn't be at sports days, couldn't be at parents' evenings, I would say no to business because we're growing rapidly, we're doing quite well, but that's the main problem.
Yeah, that phase of your life is only going to come once.
Correct.
With the kids being little and stuff, and you can't get that back. Whereas there's always more money to be made.
Correct.
And
we work backwards from that. That says, look, how much money do we need to meet our investing goals, to meet the kids stuff, the holidays, the cars, everything like that. We work backwards from that number that says we know we need that much money after tax. Then I can really build that back to I know exactly how many clients I need. And then it's never just a land grab that says we'll take anyone that joins us. It becomes I'd rather work with people that A, I enjoy working with, and B, we can actually go on a journey together, because that yields better results for everyone involved.
Yeah, you'll get better reviews, you'll enjoy the work more, full stop. And it's the same for us, if we're doing a crap load of perio treatment, you just hit perio, but it's the only thing that you're kind of getting that's coming through the door, or whatever the situation is. If you're feeling like it's just a grind and you're not feeling enjoyment for it, you're not going to last. And it's funny talking about the Baird course. A few modules back, there was a gentleman who'd come in. I can't remember which guy it was now, but he'd said, look, I'm 65, 70. I'm still working. All my NHS colleagues from university quit 15 years ago. And it's like, okay, well, why is that? And you can make your own conclusions from there. But part of it is, can you maintain your lifestyle as well? And can you maintain that level of work?
Correct.
Because let's be honest, it's a physical and demanding profession at times. Also mentally demanding, making correct decisions.
Yes.
So you need to have a balance where you can actually unwind and continue and carry on. And I think that's something that is not talked about a lot. And the stuff you're saying about actually, how much do I actually need to live on? I don't think anyone really looks at it. I haven't really. I'm living at home, so I'm pretty relaxed about things at the moment. So I've not really thought about that either. But those numbers when I move out, which who knows when, could be soon, could be a while. I'm gonna have to look at and say, actually, you know what, Bilal, or we're gonna need to make this much. We're gonna need to cover this rent and this bills and that's the other, and it's going to be a completely different situation. And I think that's a big change from university. It's a big change from living at home with your parents. If you were living at home before university, even some people living through university. Actually, I think on a whole of this philosophical bent, living at home is a huge benefit if you're able to.
Definitely.
There seems to be a big push to move out, which maybe it's cultural. I don't understand.
Yeah, that becomes a different podcast altogether. That becomes a hot chai podcast.
I finished my chai.
So, but I think you've touched on some really, really valid points there, because we could work backwards from that. That says if we sort of we work in an environment. I work alongside dentists. That says you guys earn very good money very early on in your careers. That says if nobody's shown you how to do it, and the pitfalls are, and we see it time and time again, we try to rein it in as early as possible. As soon as we see, because we do the accounts in real time, we do it monthly, we see it happening, and we'll call them back in and say, stop doing that, because what they're doing is they're making 10 grand a month, they're spending 11.
Yeah.
Because they know they're going to make 10 grand next month. So you start seeing money go on credit cards you start seeing loans creep in. You start seeing, PCP agreements for, £800-900 start creeping in for cars, for things that they really shouldn't be. Like, I'm not here to tell you what to spend your money on. What I'm here to tell you is
sustainable spend.
Correct. But you made 100 grand and 40 grand of that wasn't yours.
Yeah.
But you spent 100 grand. So now you're in a very vicious cycle that says you now need to make more money to sustain your lifestyle, but to recuperate the money to pay the tax on. But now you need to pay tax on that money.
Yeah.
And then you're stuck in a very vicious cycle to the point where you need 18 months of living like a pauper just to reset yourself.
Little tip for the practice owners out there: if you've got an associate who's slacking a bit, take them down Tesla, Porsche, get them in a PCP agreement, £1,200 a month, and then sit back and relax and watch them work like a hamster.
Don't do what he did. But
your practice will be making so much more, so much faster once they realise what they've done.
Yeah, but that's very true actually. The moment it becomes real, the moment that mortgage payment becomes real, it's the OS moment where you've got to pay it, therefore it's got to come from somewhere. And we see some really, really, really well-informed dentists come join us that are like, right, how much money can I put aside? And you see the money come back. You see them putting a third of them into NSNI bonds. Now, I don't tell you where to put your money, but it's a pretty safe place to put it, which means not accessible, it's not touching. You see people transferring it into 30-day non-access accounts, which means they can see it, they're still getting the interest on it, but they can't touch it. It's not liquid because they've got to give 30 days notice. And the way we work...
No impulses.
Correct. And it stops all of that. And I think that's a really, really good habit to get into. But it goes back to the planning side of things for associates, for brand new associates, and really any associate. If you've been sort of 1 to 5, 6, 7, 8 years, if you've gone into your steady state. But if we sort of talk about that lineage slightly, is what we've really focused on is brand new associates.
Yeah.
But if you're now an associate that's been operating for a little while, who's started to do a bit more private, who works across multiple sites, who's maybe cut down their days, which is a good thing, which says, what is a successful year? If we benchmark it on money, then it's a very manipulative it's easy to manipulate, because if you made 100 grand one year, but then you made 150 grand second year, but you worked twice as hard,
it's not worth it. You've done 50% growth for double the work.
Correct. And then you burn out.
Yeah.
And then you make even less in the third year. So we start looking at things like revenue per hour, and we start generating KPIs, which says, if you want to be earning that, and you only want to work 3 days a week, which is fair. We've got associates,
doable,
that make very good income on 3 days because they go in, bang it out, walk out. That's it. And the rest of the 4 days are for them to spend with their families, or to focus on other ventures, which is really important.
Yeah.
Because how else would we be doing things like this on a Tuesday afternoon?
Well, I took a year off during COVID, so that's how I started. But
I don't know. Well, unfortunately, I didn't. So
I mean, I'm doing 3.5 days now. So I am finding a little bit more time, but there's things that I'm dealing with that I'm trying to build up in the background. So that's why I've not been doing videos, guys. There's been on courses, a bit on the Baird course. Go on the Baird course, by the way, and tell Hassan you came from me. He'll enjoy that.
So, but you're absolutely right. That says if you're not banging out 6 days a week,
what are you doing?
What are you doing? And then if you are doing 3.5 days a week, you've now got brain space to decompress from dentistry.
Yeah.
Maybe explore other areas of dentistry.
Take a step forward.
Yeah.
If I was doing 6 days a week, there's no chance I could have done that course. It is 33 days across 9 months. That's let's just say I was doing 4 days a week, 3 days, Friday, Saturday, Sunday for a weekend. That means there is no break for 11, 12 days.
Yeah.
And it's a pain. You'll burn out so fast. So working 3.5, knowing that I'm going on this course means that actually if I have to do 6 days, the next week I know I've got Friday off.
Yeah.
I know I've got Tuesday morning, for example. And you can, that's my lie-in. I know I'm losing Friday, Saturday, Sunday to do the course, but I know on the back end of it, then the hours that I will be working will be at a higher hourly rates, potentially, if I play the cards right, I get the right patients in the door, and it's going to pay off on the back end, and actually that means I can do 2 days maybe.
Yeah,
who knows?
So let's talk about the payoff on the back end, because again that really talks to planning. That says, can you say how much you spent on or what the Baird course costs?
You're looking around 10, 11 grand. It depends. It might go up. I'm not sure. I know with the cost of living thing, his bills will be going up potentially. I don't know. But it's around 10, 11 grand plus or minus that. I don't know. Cool. Speak to them.
So let's say 10 grand.
Yeah.
For simple math, let's say 10 grand. So we know that course costs 10 grand. But now you've got 33 non-dentistry days.
Gone.
Exactly. So let's say, I don't know, you're making £300-400 a day.
Yeah. And if you're not living nearby, you've got the hotels, you've got your food, transport.
Yeah. So that then, if we said, probably 10 grand loss of income by going out to do 33 days, probably more than that realistically, probably close to 15, 16 grand.
Yeah.
And then the additional travel, hotels, food, everything like that, plus the 10 grand for the course, let's call it 30 grand.
Yeah, probably on the high end, but you know, who knows? You know, if you're a 5-star sort of guy.
So we're hit the clickbait.
45k to go on a 1-day course with me and Bilal, where we just take your money and you sit in a 5-star hotel with steaks. How does that sound, guys? Let us know and we'll get it sorted.
Steaks, good steaks, wagyu.
Good steaks. We need to go to Kona.
Kona Bradford.
We need to go to Kona. We'll do it there.
We'll tag it in it.
Right. Yeah, we'll go back.
So let's not scaremonger. Let's say 25 grand.
Yeah. Well, yeah.
But then whenever we look at courses, and again, sit in a privileged position, I get to see when we deal with hundreds of dentists. We know how much they're spending on courses, and we know at what stage in their career they'll spend what. So if you're going to go spend the best part of 25 grand on a course, and you haven't measured what you're going to get back on that.
Yeah.
The question I always ask, and it can always comes across quite terse, is did you do it for ego or did you do it for business?
Yeah.
Ego, it's not a bad thing. If you want the letters, you want the letters. And again, I'm not here to tell you to spend your money. What I want you to be is honest why you spend your money.
Yeah, yeah.
If you did it just to say you went on the course, but you're never going to do anything with it, there's better ways to spend 25 grand. But if you are going to go do, a 5 grand course, but it gives you that back in 3 days, which is better value?
Exactly.
Yeah, and
there's a lot of reasons why you can go on these courses. For example, first of all, photography courses are a big waste of time. So stop doing that. This is my big bugbear.
I know.
There's a 1-hour video with Dr. Farah Anta on our YouTube channel, and we have every single setting you'll need, the cameras and the lights. Literally, stop wasting your time. Grab your nurse at lunch. Pay her 500 quid to sit in the chair and take the photos. Yeah. And you'll still take 100 quid.
Yeah. Or you can do what I did, is buy all the gear first and ask your bear to use it. Because that's what we do.
Yeah. But it's literally practice and having the right settings. And you don't need to go on a really expensive course to do that. And the bouncers and all the flashes and stuff like that, it'll cost you 600 quid to do it. So actually you're 1,200 down, 1,500 down, and you've not taken a photo yet.
And then they're probably going to try and sell you something whilst we're on the course. Buy our LUTs, buy our thing, buy our thing.
Whatever it is, yeah.
Whatever it might be.
Just practice. I learned all my photography from online. There's Dentist Camera is a great Instagram account as well, by the way. You can literally learn it all on there if you don't want to listen to me interviewing a lovely Lebanese lady.
But yeah, whatever floats your boat, really.
Yeah.
So, but that trial and error will teach you more than anything else.
Yeah.
So just sort of going back to what we said and the planning, because in my head, the way I see it is a sort of a grid. Now, to give you an idea of what I've done in the past, and whenever we distill financial information, it's always based on, like I said, a non-financial KPI. Now, when I was employed by National Express, I was a group accountant at National Express, team of 6 of us that looked after about £2.5 billion worth of revenue across the globe. Now, when you're a senior executive at a company like that, your salary is meaningless. Everyone's there waiting for their bonus. I'm not talking me, I was paid peanuts. Yeah. All the executives that I reported to, or the board level executives, their bonus is what they worked for.
Right. Now,
the key metric to determine whether you're going to get your bonus or not was based on the safety index. So if you think of this company that turns over nearly £2.5 billion globally, their first meeting agenda, every board item, every shareholder meeting is the harm index. Is that says we've killed less people this year than we did last year. Therefore, right, that's good, because in a transport company, it's It's probably should start with that. So as a transport company, you see something like this.
I was just thinking,
buses, coaches, rail, the biggest bus network out in Spain, Morocco, Bahrain. That's all across the
for accidents and that kind of thing. Yeah,
the little yellow American school buses out in North America, all of that, they owned all of this, so it's fantastic.
Well, we can probably ignore the American side of things because other things happen there that you can't control.
Correct, but yes, mad what happens out there. And the way they report incidents is different. So one of the things I did there, so out of 45,000 employees globally, I was recognised amongst 25 of them. Sorry, I was 25 of 45,000 recognised for a piece of work that I did, which was we looked at the index and said, just because you didn't kill someone this year, is it a better year? But we've had 28 broken legs.
Yeah, well, it's an improvement for a death, but
but is it though? Because if you're comatose,
okay, yeah,
you're not dead, but you've lost the quality of life. So, and that question was raised that said, well, why are we doing it this way? And if we've had lost time injuries or minor injuries, if we've had 4 million minor injuries and no deaths, is that data skewed? Is it real?
Yeah.
Is it misreported? So we changed the way we did. We did it. So instead of it being a raw number, it was indexed. That said, if fatalities are 1.
Okay, so each thing's scored at a different level.
Correct.
UDAs of your bloody...
Pretty much, yeah. The rail industry, yeah. So it was the rail standard that we brought in. So that was a death was 1, a major injury was a 10th,
yeah,
a lost time injury was a 200th, and then a minor injury was a 1,000.
Okay.
And then we had to go back and recast 4 years worth of data and say these are the comparators. Then Deloitte had to come and audit the number. Then we had to present it to the shareholders. So whenever we did the index, the CEO would stand up and say, our index is this. If you open up any of the annual reports for National Express Group, you'll see it in there. You'll see this number quoted by financial. And I did that work. I created that index for National Express.
Yeah.
And that then says, I understand. I always try to understand the business. As an accountant, I'm never going to tell you about dentistry because it's deeply arrogant.
You can tell us about numbers underlying what we're doing.
Correct. It's cold dead eyes.
Itself.
Yeah. It's the cold dead eyes that says, right, every business, every job is just a system of processes.
Yeah.
So I want to understand your process, which is why we only work with dentists, because this side of things means the more I speak to dentists, the more I understand about the work you do,
the
better understand
some sort of framework.
Correct. And this is why I love doing this kind of thing, because people reach out to us, and why I like doing consultations is the first thing I ask them, tell me about yourself. What do you want to do? Because we then understand the type of dentistry you want to practice, where you want to do it, how you want to do it. Because the moment you say to me, I want to build an Invisalign squat practice, I already know your cost of sales are going to go through the roof. That says a third of what your revenue is will go out the other side.
Marketing and
lab fees
as well.
Yeah.
Marketing, then
so when you're looking at so I'm pretty good at it now. That says when I can look at a practice, I can generally understand the makeup of what the practice is, and then are they buying their leads? Are they doing all of that? But sort of jumped ahead slightly. So the idea being, if you're a brand new associate, planning is key. You plan out the next 12, 18 months, because we plan the soft stuff, which is I want to buy a house.
Yeah.
Right. What type of house do you want to buy? I want to buy a £500,000 house in a very nice area, because that's where my dad used to drive us through.
Yeah.
That's where I want to live. And it becomes an emotional attachment at that point that says, right, that being the case, you've come to me to talk to me about a limited company. I'm saying if you go a limited company, it might impact your ability to get the house, because you need 2 years worth of accounts and all that. We've done a podcast on that on a different platform.
Yeah.
With that being said, if we know what the number is, you've gone to speak to your mortgage advisor, and they've said your income needs to show £80,000, whatever the number is. That's gonna incentivize you to, do you go on that course this year? Do you buy that camera this year? Do you buy those loops? Loops you probably do need, but then do you spend
next?
Yeah. Do you buy all these things? Do you go on these courses? Do you take that time off? Do you go on that holiday?
Yeah.
Because all of this is now, are you going to care about the holiday, or are you going to care about the latest MacBook that you bought if it stops you getting the keys to your house?
Yeah, it becomes now you can rank what you need to do and when.
Correct.
And at what sort of urgency.
Correct. And then you start becoming more picky with your time. That says, and even in the social settings, I'll give you an idea, when I was studying to become an accountant, I was working full-time, studying full-time, because everything you do as an accountant, you study post-grad. And then I had to pick and choose. That said, if one of my mates was getting married in Dubai, he was like, Bilal, I had no money, I was of course poor, lowly paid accountant at that point, grad. I can't afford to go, and I can't afford the time to miss my exam, because I had everything laid out when it comes. I didn't pay this much attention to my GCSEs and my A levels or anything like that. It was only when I started paying for it myself did I actually start giving it back. Realised on the flight back, gave me 4 days to study for an exam. Right, I can't do that. I can't risk it, because there's more to play for here.
On the back end, you're going to lose out.
Correct. And then, so all of these, as you know, your associate, brand new associate, working for a couple of years, is understanding what you're trying to achieve in the background. Because all of this then leads to, because if you start getting obsessed about tax, you lose sight of the big picture. Yeah. If we can focus on the big picture and the goals that you want to set and the achievements that you want, we can work backwards, and I can tell you what the tax number is with probably 1 or 2% accuracy.
Yeah.
That then says you know what that number is, make peace with it, and then you know what the other part, the other end is that gets you the thing that you wanted to get, how hard you need to work for it, and how picky you can be with your time. So that's really the associate journey.
Yeah. What are the raw numbers that you need to start looking at as an associate? So, and how are you going to start collating those numbers, for example? Because you're going to work and you're doing your work, blah, blah, blah. You're not thinking, I need to mark something up on a spreadsheet or something like that. Is that what you would start doing?
Yeah. We've got all the tools, we've got the templates, we've got everything. Basically, we've got the raw data to tell you what the next 12 months will look like anyway. So we can predict your indemnity, we can predict your insurance, we can predict everything that says, but then there's bits that you need to tell me. So the way we look at it, there's 3 sectors. Step 1, income. And the way I want you to look at your income is how much is NHS, how much is private, but I want you to split down your private further. That's how much is self-generated, how much has Jabir done on his social media.
That's getting me X, Y, Z.
Correct. And then the third one is how many orders am I fulfilling? You know, how much of what I'm doing is the practice of putting it in my diary, and then how much of that is crowns, how much of that is veneers, how much of that is composite bonding, how much of that is orthodontics.
So would you have a list of exam scaling, filling, X, Y, Z, put a value associated with it, with pound value, probably easiest, and then just each day go onto your spreadsheet and fill it in?
Yeah, so you can break it down as much as you want. Realistically, we could do it off your pay schemas, your schedules that you get, because that's got all the data on it.
So mine that I get, I don't know about other people's practices. I just get the overall number.
And the practice will have the breakdown.
They will have it. Just some people might find it harder to get hold of it, so you might have to do it yourself.
Yeah.
Essentially. So it's something that you would have to look into, whether you can get hold of those numbers or not, or you should do it yourself.
And then that sort of leads the question on really nicely: is how do you know your numbers? You need to own your numbers, and this is what this premise is.
Yeah.
Is owning your numbers. So you need to know what you're earning per day, because how else do you reference what your bank account? If you're relying on the practice, well, I'm not saying the practice do it maliciously, but people make mistakes.
Yeah.
And how do you know they've made a mistake?
Got a clue.
Correct.
Got a clue. Yeah.
So we can build it out by day if you want. We've got the templates to do it, and we can build it out by hour.
Yeah.
That says we can put in day, hours. We can work out what your hourly rate was that day, so you can beat yourself up if it wasn't what it needs to be.
It's better to do it over a slightly longer period, right? Because you'll have days where you're setting up treatments and not finishing them. That kind of thing. So at least you know over the course of a month. It
depends on the person. Some will want that level of detail. Some will want it just on monthly. Some will want it over a larger period of time. Some will want, shorter periods of time. It depends on you.
Yeah.
So as long as you're planning, I don't really care.
At some level, and you're being consistent with it.
Correct.
Yeah.
Because the objective you're going for will determine how much detail we go into.
Yeah.
And then, because if it's a monetary goal, then we sort of don't need to know about the hourly rate. But if it's I want to work less days, earn more money,
then it's an hourly rate.
Yeah.
Yeah.
But if it's a case of I just want to know what my next I'm a brand new associate, I want to know what my next 24 months looks like. And then we work from that. But it really depends on the person. Now you can do this yourselves. I mean, all you really need to know is your income, your direct costs. So if I want to be the de facto Invisalign person in the north, then I can fairly accurately argue that a third of what I'm doing is going out for
day one. Yeah.
And then from the back of that is then what are my fixed costs? So you have income, variable costs. Variable costs are linked with income.
Yeah.
So the more money I make, less money I make, the more those costs will go up and down.
Yeah.
Your fixed costs. So
staffing, overheads, electricity, gas, all of
that. And even as an associate where you don't have those costs, do you want to pay for someone to do your marketing to start generating new leads? Do you want to pay for an administrator to come and start dealing with your paperwork, start typing up your notes, and then you just dictate them? And is it worth your time that says, if you type up your notes at the end of the day, this is going to take you 2 hours. Do you just dictate them and then spend those 2 hours generating marketing content on social media that generates you more money?
Yeah.
And we look at it that way. That says everything's distilled down to why. And that's what we do. As accountants, I can never tell you to be a dentist, but I can ask why.
Yeah.
Why are you doing this? Why are you doing it this way? We see a different way to do it. And we look at it from a very process perspective.
I love processes.
Yeah. And as accountants, we're trained to think that way.
Yeah.
Is process.
Yeah, and by that then you can, once you have your numbers, you can change something and see whether it makes a difference.
Yeah.
Otherwise, you're just winging it and going, I don't know if that made a difference or not. And then who knows? You could be going in the wrong direction for months and months and months, and you have not a clue.
Yeah,
not a clue at all.
A really good example is discount codes. So, reason why companies use GBA10 as a discount code is whenever that discount code is used,
Linked.
I can see the data behind
Correct,
it.
yeah.
Correct. And then you can see whether it was worth it or not, or are we all just doing it based on vibes? There needs to be some structure behind it that says, look, some people are really good at not winging it, but using sort of sense of intuition.
Yeah.
And that says, they feel it's worked this way, but that's usually by accident as opposed to something they've learned.
Yeah.
And that's why you get sort of a massive disparity between earning levels.
Yeah, the people who work at something from a base of knowledge or versus a sort of on the fly sort of attitude. We're doing this podcast on the fly, but it's a different sort of not quite on the fly. We had some framework, so we're working from some knowledge.
Yeah.
But if we just turned up today and said, okay, we're going to talk about some accountancy stuff.
Yeah. Well,
trying to cut down. Then who knows which way we go? And people have seen me speak before. I can go all over the place. I've taken this left and right already. And it makes a difference if your financial well-being, your end goals are on the back end of what you're doing.
Yeah.
And you're on a hook for it.
But even then, I think you're not giving yourself enough credit. This podcast was, 3 weeks ago? We planned this in?
Yeah.
And then it was lighting, cameras, do we have all the equipment? So there's a GoPro there, which will shoot some creamy B-roll. There's 2 sets of lighting there. There's an RGB light there. We've set, the room is cleaned out ready. Jabeer's bought 3 lenses, cameras there. So there's quite a bit that goes into it that says, but I think the flavour of what we discuss is less scripted because we want to be able to go off on tangents.
No, yeah. So, I mean, I've done things which are really, not scripted, but we've had points and points and points.
Yeah.
And they're good.
Yeah.
But it's for a different sort of thing. The Endo Mentor series, which again I need to really get back on top of, is a lot more scripted. We have an hour or 2 planning session beforehand. Yeah. We're doing it live, and then we pick up the questions and answers afterwards. But that means that we have a structure, and then there's questions are obviously on the fly. But doing that as an associate, just walking into the job and seeing what happens, you're wasting your time. And again, you'll know from a monetary value whether people are doing better NHS versus private, and better after and before courses.
Yeah, I agree. And there's a couple of things in that is why you would need someone to help you with this is those that do better in dentistry generally have someone else that's done it, a family member, a friend, parent, cousin, or something like that says who's a couple of years ahead of them. That's probably imparting some of their knowledge, what they wish they knew, but they had to learn that the hard way. We've got some established, not associates anymore, more entrepreneurs where we've gone through their numbers, making very good money, and only 18 months after the fact have they gone, why was I even there? And you think, well, if you planned it and looked at what you wanted out of that, and then realised it only made you 20 grand. In the grand scheme of things, if you're making multiples of £100,000, that place only made you 20 grand. Whereas the other thing,
waste of time.
It's a waste of time.
Yeah.
But then it's okay because if you're honest with yourself, and I do it because I like doing it. I work at that practice because I get to work with kids, and growing up, I grew up in an impoverished area where kids had terrible teeth. That's why I do that. Fine, we ring fence that. We put it to one side.
Yeah,
and
that becomes a personal
correct
thing, not a monetary or a goals, whatever thing.
Correct. Yeah, that gets ring fenced as passion. Because there's things that we do pro bono, there's things that we do for charity that take up a lot of our time, but we do it because we like doing it.
Yeah, and
it's the right thing to do, and it reminds us where we came from, and it's the right thing to be doing to keep us honest. That's from a HeathHillGreen perspective. So we've sort of talked in detail about the associates. So just to wrap that up, and one for the reels is perfect planning prevents poor performance.
Yeah.
By having the figures, the data, everything in place, you can plan the next 12 months off, and you can determine your vision of success. So we can turn that into a reel.
Yeah, we can shoot it again. Maybe in birds. Cool.
So then we move on to your associates that have done that. That said, right, I wanted to go on and move on to the next step. I'm making good money. I don't need all the money I live off.
Yeah.
What can I do with it? Now, just to sort of caveat, this is neither one of us is about to give financial advice. We absolutely do not give financial advice. We draw a fine line in the sand that says we are not going to give financial advice because that is not our area of expertise. And
that's the accountants. I can talk nonsense.
You can talk nonsense. I don't, unfortunately. So we will not give financial advice, mainly because we're your advocate, and because we look after your money, we're not going to then tell you what to do with it on the back of it. But we will always validate the advice you get. So if you go out and a charlatan gives you need to put your money in these jelly beans, and then I say, no, Jabir, those jelly beans aren't going to turn to beanstalks. They might do, but all right, we'll go harms on it. We go harms on it. We go harms on it. I don't want to miss out the beanstalk.
Yeah.
So, but we validate.
Yeah.
Now, from that journey that says part of the session, goals change, ambitions change, strategy changes. But let's say the goal is to generate 50 grand worth of liquidity after tax.
Yeah.
Well, what would you do with it?
You need to have an idea of what your end goal is. Yeah.
So, and that then determines whether we go limited company, sole trader, or anything like that. And again, check the previous podcast for that. Is, well, you've got 50 grand liquidity, I want to put it in houses. Right. Why do you want to put it in houses? Because they're really good. Right. Go on a course that finds out about houses. Don't spend the next 18 months saving 50 grand net, to then go looking for houses and realise you hate every second of it because you've just wasted your time then.
Yeah.
And that's the biggest thing I always say. Everyone else's property, right? Fine, go try buy one. And
it's a headache. It takes months and months to do it.
If it's hard trying to buy your main home to live in, wait till you buy an investment property.
Yeah.
It's hard. And everyone, you need the inside track. So unless you've got someone that's going to show you houses that before they come to market, then it's really hard to get onto it.
Yeah.
There's courses out there that'll show you how to do it. But it'll give you flavour that says, if you spend £500 to go on a course, there's a lot of bogus courses out there, so go on that's recommended. And I don't recommend one. But you will understand how hard it is to do it. And if you think, well, I don't really care because that's what I want to do, well, that's fine.
Yeah.
That's completely fine.
It's up to you what you do with that money.
Correct.
It's just, it comes down to that sort of personal choice. But it's okay, I want this money free and this is what I'm going to do with it. Whether you're going to listen to Bilal, whether it's a good idea or not, is a completely different story or whatever. So, yeah. And
accountants generally massively pessimistic. We are massively pessimistic. We have it ingrained into us to minimise risk to something like ALARP as low as reasonably possible, which is why we're not sort of always pie in the sky dreams. So we're generally...
It's the opposite down the side of the screen here. I do crazy things and Bilal reins people in.
That's why it's the comfortable chair. So with that being said then, so the most popular thing we get is I want to set up a business.
Yeah.
Now, the mechanics of what we're about to discuss next. So just along that linear, this sort of the timeline is your associate. We'll talk about planning, plan about how you want to spend your money, plan for your taxes, plan for your courses, create a plan of action.
Yeah.
Right. Next is you've hit that first milestone. Is I want to be able to be in this position. Fine, we've done that. Now what next? So let's say you want to have 100 grand in your bank account, so you can now open your own squat practice.
Yeah.
The numbers are arbitrary. Could be 50, could be 60. The number's irrelevant, but let's say that's a number. So we can work backwards from that. We've got to that milestone. Right, what's next? The next is want to set up a squat. What costs are associated with the squat?
Yeah. What do you want to have in there? What patient base are you targeting?
Yeah.
What treatments are you going for? All these things.
Correct. So, and the one that I say really early on in our planning sessions is if you want to be very successful in your squat, be very comfortable with generating your own business. Don't open your doors thinking someone else is going to put
people in the show.
Correct.
Yeah.
Have your platform built up over that time. And again, let's go back to the associates. It says, if we know this is a 2-year plan, that's 2 years to hone your craft.
Yeah.
Hone your style, hone your social media presence, hone your personality, build up your referrals, build up your client list that says, build up your mailing list that says, the moment those doors are ready to open, you've already mail shotted all of them and they're ready to come in, but you can't breach your
current practice thing.
Correct.
But yeah.
But if they're your patients and you
Different
have that agreement,
situation.
and let's just sort of take a step back slightly because there's a point that I wanted to make that says if you know the next 2 years you're going to be banking in, you need to make 200 grand worth of private, or the next year you need to make 200 grand worth of private, means you must have generated 400 grand worth of private. At least. Now, if I was going to have a business plan to go back to my principal and says, I need to make 200 grand worth of private net, I'm going to make you 200 grand.
It's going to be more like most people on 40% now.
Correct.
35% some places.
But you can sure as hell with my 400 grand, I'm going back in and saying, I want 60%.
Yeah.
Yeah, and it puts you in the better negotiating seat because you've got a robust plan. And I guarantee no other associate's doing that.
Yeah.
No other associates going back to their principal and saying, and I will be generating my own business. I will be filling up my own book. And I will be bringing in all these clients. And then, you know, we've seen some go as low as 25% principals.
Yeah.
Because it's worth it for them. Because they know you're going to lose you anyway.
Yeah, so they might as well take a chunk while they've got you.
Yeah.
And
because it becomes a case of they don't do it, someone will. And it might not be 25, it might be 30%, but that still makes more money for you. And then we don't factor that in the numbers. We still factor it in at your current split because the rest is gravy. Because it's one of those shoot for the moon.
See what you get.
Exactly, and at least you've got off the earth. So back to the associates now. That says if you've now spent the last 2 years generating your own book, generating your own clients, generating your own presence, generating you as a brand, then you're now in a far better position than having to give a marketing firm 10 grand a month to start generating leads.
Yeah.
Which look, it's a proven model.
It works. Yeah.
It does work. Of course, it works. They wouldn't exist otherwise. But then you're no different to any other practice per se.
At that level. Yeah.
Correct.
So there's other things that you can use to differentiate yourself, obviously, but in terms of generating the leads, it's going to be, you're going to be the same.
Correct. So then we go into a different mindset altogether because where you were the service provider, providing the dental treatment, you are now the business owner. It's a different mindset now, and we can coach you through that. That says you need to look at what revenue you need to make now, and now there's no commissions. Now you're the one paying. Now you're the one gaining commission from the associates. So now your obsession isn't now how do I do those treatments, and how do I have enough associates providing treatments that I no longer have to do wet dentistry.
Yeah.
And I can pick and choose who I deal with. No, I just want to do the veneers.
Yeah.
I just want to do
It's a different ball game. You've then got to think about, again, going back to systems.
Yep.
And what kind of model of practice is going to work.
Correct.
And how the patients run through that model.
Yep. 100%. And you be obsessed with the patient journey.
Yeah.
Be obsessed with patients. Don't be obsessed with how you're going to get them. Be obsessed with what you're going to do with them.
Yeah, it's more expensive to get a new patient than to keep an old patient. Although new patients might generate you more money on the initial sort of basis, but if you get people coming back, you're going to get 5-star reviews, etc., etc., etc. I know of somebody who's doing. The battery's gone on the GoPro, guys. I know of somebody, not going to name names, who does a certain business and he's got enough reviews. Now he doesn't run ads.
Yeah.
Google reviews. You type in what he's doing in the particular area he's in. He's up on the first page and he's got enough reviews that if you look on the little map thing, there's no choice where you're going.
No.
Yeah.
Just incidentally, as us as a practice, we have grown rapidly over a short period of time. Our website isn't properly live yet. We don't have a Google presence. We don't have anything. We do social media. We most of our business comes from referrals.
Yeah.
And one of our most successful clients who runs a multi-site practice, he can just put his prices up 10% each year because repeat business. He has an engaged patient base.
Yeah. He
doesn't have to chase a new business. They focus on. I'm not going to say what it is.
Quality.
But yeah, but there's a quality approach, not burn and churn. There's other practices that focus on churn because they've nailed their marketing and their associates make an absolute fortune. But it's a different business model. It's not, there's no right or wrong way.
Yeah.
But there is a different. But ultimately, if you could prove your
model
client base, your practice is worth more with
return customers than something that if you turn off the marketing, it's gone.
Correct.
Yeah.
And that's a really valid point because what happens if you fall out with your marketer?
Yeah. Own your own data, by the way.
Yes.
Definitely
do that one. IP is very important.
What's it? My Smile Network. They own all the data. That's dangerous.
Yeah.
I don't like it one bit.
No, God, no.
You might want to use it initially, but run something of your own alongside it because let's just say they decide to quadruple the price of per lead. And you've got zero data to work with. Okay, yeah, you might have the email addresses and phone numbers of the people that you've got who came via My Smile Network, but you're going to have to fish those out and sort it out from all the rest of the patients you've got to then make a lookalike audience. You might not have enough people to make a lookalike audience, in which case you're royally screwed.
Yeah.
And you've gone from doing, let's say it's 100 Invisalign cases a month or a year or whatever time frame you want to look at, to essentially having nothing to work with.
Yep.
And
It's scary,
That's gonna be a pain for you.
Yeah, it's scary, and I think this is the risk averse side. That's the kind of thing we discuss. That said, what would happen if this turned off tomorrow? We refer to it as the levers.
Yeah.
That says if what levers can you pull if something goes wrong, and then what goes right. So when we look at your planning for your associate, so if we just look at that mid ground that says I'm looking to buy my practice, one thing I will absolutely caveat at this point and stick it right out there is when you approach an accountant and says, "Can you do my accounts for me?" They will quote you a price.
Yeah.
So Jabir comes and says, "Bilal, can you do my accounts?" Well, HeathHillGreen, can you do my accounts? This is the price you pay. When you start wanting additional services, expect to pay more money.
Yeah.
And this is a challenge that we have because we have invited clients to leave because they paid us a fee to do one thing for them.
And then X, Y, Z on top, for the same.
And the analogy I use is, well, I came to you for Invisalign, and you quoted me for Invisalign. Yeah. And now I'm saying, whilst you're in there, do you mind doing a root canal, some bonding, some whitening,
all for the same price,
and some veneers, and all for the same price? But you're in there anyway.
I have a word for that.
Yeah, well, that's
called the NHS dentistry.
yeah, but we're not NHS accountants. So, and I think that becomes a challenge when you approach professionals because if you, as long as it's all up front, then it's perfect. And we're really upfront with our clients. It says when you sign for a service, this is what you want, and within that there's wiggle room because we want you to talk to us because we want you to tell us what you're doing, and I don't want you to be afraid of an invoice. Because we never do that, by the way. If we have a chat and you see an invoice in the post for us, it's a mistake. If I've not told you beforehand this is chargeable, and it's different. And the only time it's chargeable is we actually have to do something. So the planning stuff, it's a separate product. It's a separate thing that we do. This isn't a pitch for the product. But we build some of it in anyway that says we will give you the tools for free. As part of our website, they will be downloadable for free, and our website goes live in about 6-ish weeks. So they will be available to download for free, and they'll all be on there. And there'll be a how-to guide as well, because I'm a big believer of putting good out there. And I think it's worth...
if they want you to do it.
Correct.
That's then chargeable. And obviously, your time is worth something, guys. You need to decide it's worth you doing it so you understand it, or it's worth Bilal doing it so he can just tell you this is what's going on and then go from there.
But then along that comes with a detailed package, is the coaching, is the underlying data. The fact that if you join us as a client as well, we're doing your accounts in real time, so we're then able to reconcile the plan to the budget. Now, one thing you never do is change the budget mid-cycle. You create the 12-month plan and you leave it alone, because then how do we measure what actually happened? What the temptation tends to be, well, let's change the budget because this has changed. Well, no, we need to understand why we didn't know it changed, or what it's called variance analysis. It said if you were going to generate 50 grand's worth of business and you generate 60 grand's worth of business, well, if you did 10 grand more, but if it cost you 15 grand more,
then you're less effective.
But then the learning is really valuable.
Yeah.
Because why did it happen? Because then when you do the next budget cycle, it's more refined, it's better. Then it's an iterative cycle constantly, and you want to be able to do it as early on in your career as possible, because when you get to the bit where it's really important,
you've got as much data behind what you're doing.
Correct.
As you can. Yeah.
And so if we just sort of stick to that mid ground at the moment that says, well, if you want to buy dental practice or set your own squat up, and it's really sort of divergence along the same path, because you need to have got to the point where you've got the liquidity to then buy the practice. And then when you're buying the practice, they'll give you sets of accounts, but you still need to be able to break that out that says, if you're buying a practice based on potential's
worth nothing.
Correct. But then you need to know...
Weirdly enough, we had this chat with a young guy a couple of days ago, me and some other guys, and he was going on about how much this practice he was going to potentially buy was worth, and we drilled him on it, and the contract was awful, NHS contract, and he was paying for private potential, and I was like, bro, there's nothing there. There's nothing there. Yeah, there's nothing there.
Yeah.
So it's one of those things that don't get fooled and fobbed off by. It's like when you go into view a house and it's got period features. It means there's little nooks and crannies that you can't use.
Yeah. Yeah, there's a fireplace that you'll never use, but...
Yeah, and they've got the little alcove that you can't stick anything in.
Correct.
So you're just that's a bit pointless.
So it's really important you say that, because when you're selling it on potential, if it was that valuable, why didn't they do it themselves?
Yeah.
And then you sort of look at it the other way. The amount of valuations we see overvalued. The amount of £1 million practices I've seen go for nowhere near that is shocking. So £1 million practice sold for 600 grand, 400 grand, 200 grand.
Because what's it really worth?
Correct. What's it really worth? It's worth what the other person's prepared to pay for it.
Yeah. Let's look at, for example, if you had £1 million worth of money ready to invest in something, aren't you going to go for a dental practice which is going to make you 60 grand?
No.
Or you can just go and buy some, and you've got to work it, by the way.
Yeah.
And there's all these annoyed nurses running around because, whatever, they've had arguments, etc. And you've got these associates wanting to leave because you've got an NHS contract and they hate it.
Yep.
Or just buy £1 million worth of houses and just go, okay, well, I can make 6% do nothing.
Correct.
Well, not nothing, but a lot less.
A lot less stress.
A lot less.
Or you can let it sit on the S&P 500, and as long as it beats 5-6%, then it's fine.
Yeah, and you've done literally nothing then.
Literally nothing.
Literally nothing then. Yeah. So there's all these things to look in more detail at. And actually, well, you might say, well, yes, I'm only going to make 60 grand as an associate-led model, but I actually want to work and I'm going to do X, Y, Z. Maybe at 250 by then.
Yeah.
So then you're like, okay, well, you've doubled what you're working because you want to work 4 or 5 days. That becomes really potentially worth it.
Yeah. Potentially
worth it. I would still look at anything less than 50% return.
Correct. But again, different strokes, different folks. And it's a whole different thing altogether. So when we understand from an associate model that says, because we take it in stages, and let's take one dentist as the entire journey that says they wanted to own their own practice. They wanted to buy a house in 2 years.
Yeah.
Once they've done that, they wanted to then buy an investment property. Once they've done that, they now want to buy a dental practice.
Yeah.
And we use dental practice, buy dental practice as a squat, as a private practice, NHS practice.
Just as an overall, I want to own a practice somehow.
Correct. And then we work out from there. Now, the amount of dentists we come across that are in the process of buying and still don't know the best way to buy it. So if you're buying a private practice for the building, do you want the building in your own name? Do you want a limited company? And it becomes mind-blowing at that point that you think you've already had to take all this data on about this potential debt that you're taking on. Now an accountant's coming telling you about all these other things.
Change your structure, how you're doing it, yeah.
Correct. The banks don't really care because they're going to lend against it anyway. It doesn't matter to them. So, but it's sort of the data that comes, the information that comes at you at the wrong time. But again, if you plan for it and you spoke to your accountant that said, these are my 3 scenarios, I'm going to buy an NHS practice, might buy a mixed practice, might buy a private practice, might set up a squat.
Yeah.
Then the scenario, the way we approach all 4 is going to be different.
Yeah.
But now you know your options.
Well, within those 4, you've got freehold, leasehold as well.
Correct. Yeah.
And then if you have got the freehold, you buy it separately under a different company if you decide to sell the practice and jam on a 25-year lease.
Correct.
And inflated value and just feet up.
And then pay the VAT on the lease.
Yeah.
So stamp duty on the lease. And then potential VAT on it as well. So depending on how much the rent's going to be. So with all that being said, there's no binary answer to any of this, but we can preempt them, and we can give you seed knowledge, water that knowledge every time we speak.
Yeah.
And then you build more of a business brain as we talk about it. Because look, it's an education, and I can never expect you to know what about accounting because there's too much to learn.
How am I doing?
You're doing well. You're doing very well, to be fair. But it changes every month, every year.
Yeah, this is the thing. So it's something that I would know a month back is something's changed, and
correct.
Where it's up to guys like you to give us the info.
Yeah.
And update.
So that's the bit there that talks about I'm an associate wanting to make that next step. It might be any business, it might be a property business. My passion project might be to have the best burger in the Northwest. And that might be why you only became a dentist because your parents told you to become a dentist. You actually wanted to flip burgers.
You were trying to fund the farm for the burgers that you're going to make.
Correct.
Wagyu only.
Vertical integration, baby, is the only way. Own the entire chain. So
the Elon Musk of burgers.
Elon Musk of burgers, yeah. Self-eating burgers. That sounds cannibalistic.
Self-eating, that's something else.
No, yeah, that's another podcast altogether. So, with that being said, is again going on that journey. You wanted to buy a house, you want to buy something. You then want to build up a pot of reserves to invest, and then you want to build up the pot again to buy
do your passion project or whatever it is. Yeah.
And now you've got the practice. What next?
Yeah.
So we've talked about structure. The structure is really important on what your goal was. So we can now plan for that. And now, bearing in mind, if you've been with us across this journey, you've been with us for 6 years at this point. We've taught you along the way. You've educated you along the way. You've learned the way we talk. The relationship's really important. And I think one of the biggest complaints that we get is my accountant doesn't tell me anything. Well, did you ask?
Well, yeah, there's something else. It's like, well, if you're paying for something, why are you not asking 100,000 questions? Right. And then you just get on the back end, and your accountant could be really good.
Yeah.
You don't know.
Yeah.
You've never spoken to the guy.
And I assure you, they will have this knowledge, and it's probably talking me out of business, but it's fine. is I've got no qualms with other.
He's only taking selected clients anyway.
Yeah, it's true.
So
it's true. I'd love to deal with everyone, but we can't.
Yeah.
So which is why I don't mind making statements like this. Is
I got say for dentists.
Yeah.
Brilliant dentists around where I work, I'm sure. But I can see 10 patients a day max.
Yeah.
Let's say I'm in Halifax at the moment. There's 320,000 people living in Calderdale. How many days is it going to take me to get through all those guys?
Too many.
It's not going to happen. So it's one of those, yeah.
The following sentence: if you sent your accountant an email that said, Mr. and Mrs. Accountant, or Mr. and Miss Accountant, or let's like gender it, let's say accountant, that's a whole different thing altogether, maybe. So I've lost. I need to send something.
You send an email.
So send an email. Accountant. Well, what's it done? Identifies as accountant. Anyway,
that's worrying because are they licensed? Have they got the qualification?
That's the whole. Don't get me started on that one. So if they accountant, I would like help with this. I'm prepared to pay for it. If you open the statement like that, can you provide me a quote? They will undercharge. If they don't already do it, they will undercharge for it. But you will get them because there's value in them doing it. Because if you think about the way we work, if we've got hundreds of clients, we have a process flow for year-end accounts, everything anything that comes in as a curveball, as a gratuitous request, we have to find time for that. Now and that's not as we're lazy or anything like that. It's our processes have to be quite tight for it to be profitable for us.
Yeah.
So if you want something that's over and above, then be prepared to pay for it. But then tell them you want to do that, because if they then have to give up an evening, give up a weekend, give up something like that, then
it's time.
Courtesy, because how would you feel if someone called you up and said, I need an extraction, I'm in pain, I need it done now, and you would say no. But if they said, give you 500 quid,
which tooth?
Yeah, how many do you want at this point? I'm not charging for two. So
yeah,
and I think this is where again you determine the value of that time, because if they can do it for you, and then they can create this plan that's going to generate you 15 grand for this year, then it's cheap. It's worth doing it. But if it was just a stab in the dark, we'll put it together, we'll send it off to you, then it's not really worth it, because you're still left on your own. You don't want that. So, but ask the question. So approach it in that manner that says, I would like help with this. I am prepared to pay for it.
Is there anything you can do?
Yeah. Is there anything you can do?
I think that you've touched on something really important, and something we don't talk about too often is valuing of time.
Yes.
As a dentist, for example, when we quote a treatment plan, all those things are not just for the treatment. Correct. It's how much is your time worth.
Yeah.
There is a value associated with you being in the practice, and again, if you're looking at those KPIs we talked about earlier, and you only want to work 3 days, let's say, because that's what you decided, then you have to appropriately charge for that. Obviously, doing the right thing for the patient always, etc., etc.
Right.
But you decide how much you're worth.
Yeah.
And that's something that you need to look at. If you're going into practice, do you have the license to do that? Obviously, if you own your own practice, you do what you want. But for example, if you go in and you start lowering prices, my god,
yes,
you would be out the door fast.
Yes,
value that time. I think that's one of the things that unfortunately the dentistry in this country is not valued.
So what's interesting is on discounting, and we're sort of jumping around a little bit, is you valid point, because if we just go back to the Bear example and say it was 25 grand, you spent 25 grand on the course. Well, how many implants can you fit into your day? So go back to the budget.
Yeah.
Well, I can do 50 implants across a year, for instance. Well, then when do you want to see that 25 grand back?
Yeah. Do
you want to see it over 6 months? Do you want to see it over 2 years? Do you want to see it over 12 months? What do you determine as a good solid investment for that? We call that return on investment. That says, if I put this much money in, well, it's called a return on capital employed, which is slightly different. But if I put this much money in, when do I get that money back?
Yeah.
And that's different, is because that's how you value whether training's worth it or not.
Yeah.
And this is where you get to be selfish when you go on training courses that says, hold on, what should I be charging for this? And then you build that into your plan.
And let's be clear, intro photography, you're never going to get your money back. So stop going on the courses.
You heard the man. So
patients don't care. They want to see you from here.
Yeah.
Hold on, there. They don't want to see it up here.
Oh God.
Inside, absolutely not. Over here, all right, maybe. They want to see faces and they want to see eyes.
You want to know what my biggest bugbear with social media dentistry is? My biggest bugbear
Go for it.
is
This is a whole new podcast now,
This
but
is
who
the whole-
cares, right?
but this is
We'll
you got
finish
to
this point,
understand.
go back.
is imagine my social media was aimed at accountants.
Yeah.
It's not. It's aimed at my clients, with dentists. Everything I do is aimed at dentists. So I talk about dentistry, I talk about courses, I talk about loops, I talk about implants, I talk about all that kind of stuff. I talk about intraoral scanners, arterial scanners. I talk about things that are relevant to you.
Yeah.
A lot of social media dentistry is aimed at other dentists.
If you're doing referral work, fair enough.
But how much of that? So when you've got 10, 12, 13,000 followers and everything is gory, if I was a patient, I would want to know, ouchie, ouchie, no more ouchie.
Yeah.
That's exactly what I want. And the other one is, my teeth were horrible beforehand. I can smile quite comfortably now. I can't yet because I can't finish my Invisalign course. I'm the worst patient for this, but that's a whole separate thing. So, but that's a whole different thing. We'll come back to that.
Yeah.
So we go back to pricing. We come back to courses. We come back to everything else. So we're at this level of should I set my spot up, and then we go through the numbers. We work through. So this is where cash flow statements become really important.
Yeah.
Cash flow statements become really important because when you look at a set of accounts, it doesn't have the full picture on there.
No.
Because when you look at a set of accounts, let's say you borrow £1 million to do your practice, and of that, let's say 20 grand a year is interest payments.
Yeah.
Well, the rest is you're still repaying the capital, aren't you? But that doesn't show up anywhere on the P&L.
No. You have to account for it.
Correct. It comes out the balance sheet, comes out a separate area. But we build it into the cash flow. So cash is king. You might have heard the phrase. That's put down a banner there. Cash is king. There. And then it's really important to forecast those things because now you need to know how many wages you're paying because you haven't had to do that before.
No.
When you're paying wages, you're paying national insurance contributions, you're paying pension contributions. You've got to pay for, if you've got 5 members of staff, then statistically across the year, one of them's not going to be there always.
Right, yeah.
Because they've all got holiday. Well, it's 10 members of staff, one's not there. So it's 200 days that they're off. So one won't be there. How do you cover that? Do you cover that with locum? Do you cover that with the other 9
Or are
working
you slightly
holiday?
overstaffed to start with?
Correct. And then, sick pay, maternity pay, all that kind of stuff. You've got to build those into your numbers. Once you know your baseline costs, you know your variable costs, you now know what your pricing is. Now, with the cost of some dental practices, they look good to start with. You think this guy's making £1 million a year and he's clearing 200 grand for himself, but he built it from scratch.
Yeah.
So it doesn't have the overheads you're acquiring.
Yeah, it's a whole different situation. Everything that guy's making at this point is pure in your pocket profit, nothing being taken away on the back end after he's paid off his initial investment of building the rooms, etc., etc., etc. And that's the value you're buying.
Exactly. That is the value you're buying because he's done all of that, or she's done, or they've done all of that. And it's all been done, and you're right. But then you've now got to, don't look at this and, ooh, that's brilliant for me. You've now got to grow that by at least 10, 15, 20% for it to be viable for you now, and for you to leave enough meat on the bones for when you sell it.
Yeah.
So whenever we look at any plan, we always look at exit. So why are you doing it? Do you plan on keeping it forever? Perfect. It's dead easy.
Yeah, just let it roll on until you're in,
If it's an asset, well, what's the exit plan?
Yeah.
And this is a neat segue. How long are we into this?
Ooh, we're an hour in.
Wow, it's a long one. So the next one then is, and sort of the final point is practice ownership. We've
got the practice.
Yeah. And again, we're sort of using everything at the same squat, NHS, private, however it is. We bought it the right way. It's done what it's done. Practice is making the money that it's doing. You're now utilising your investment plan that says an investment plan can be, I want to refit a surgery every year, every 2 years, every 3 years, which is why the cash flow statement is really important.
Yeah.
Because once everything's paid for, how much cash do I have left in the bank to then go spend 50 grand on refurbishing the surgery too? Do I have 30 grand cash to go buy another arterial scanner, or do I finance it and all that kind of stuff? Those are the in-life decisions we make for a practice. Do we buy new hardware? Do we buy new software? Do we, all of these things? These are all part of the planning session, because when you're through growth phase, stability is dead easy because you know your business day in day out.
It's that first from zero, getting up there.
Correct.
That is the pain points, the bits that you have to survive.
Yep.
And then you can relax.
Correct. And now your decision making is different. Because if you had to, for the first 3 years to support your practice, do all the dentistry, the wet dentistry, now how do you create your business to being an associate-led model? Whether you will ever sell your practice or not, always approach it as it's an asset to sell. Because that is the only reason why you should own a practice in the first place. Because you can focus on being a really good associate and earn $250,000 a year with none of the headache of ownership. Or you could become a practice owner and make 150 grand a year, but still make
plus headache.
Plus headache, But the benefit of that is A, you could sell it for £1 million at the other end, and B, you will make 150 grand a year whether you work or not.
Yeah.
So
obviously, if you start working, you'll make the other chunk as well.
Correct.
That 150 is an associate-led model.
yes,
Yeah.
yeah. But again, those numbers can be whatever they need to be, but it's just arbitrary figures at this point. But then when we look at a business plan, so once the business is steady state, we then look at how we change that to a associate-led model.
Yeah.
Because that's where the value is. Because you can now sell that between 8 to 10 times what the associate-led income is.
Yeah.
So
because that then becomes in the same bracket or conversation as buying a house for a rental, Airbnb, etc., etc., etc. It's now hands-off, relatively sort of investment. You're just managing things as opposed to using your time to do the actual business.
Right. Well, you're trading time for money at that point. Still
Yeah.
So at that point, we then look at what the long-term plan is. So that's when we start looking at plans over a wider time frame. So to give you an idea, we've got a client that wants to take their business to X, and once they get to X, they might sell it. So right, let's do that. And now within that comes so many decisions. Let's say you originally bought it as a sole trader.
Yeah.
Well, do we incorporate it? Do we turn it to a limited company? Do we wait to turn it to a limited company? If you're going to sell it, don't bother. Do we move things around? Do we plan on doing something with it? Because all of that structure changes things. If you're a mixed practice, do you keep the NHS as one side? Do you separate the private out? Do you leave it as it is? Because if you're going to sell it anyway, then you've no benefit in doing it. Just leave it as it is. With all the money you're siphoning off, that sounds really bad. With all the money you're making in excess of what you need, after taxes are paid, is then what are you doing with it?
Yeah.
So all of that becomes really important. Now, so someone reminded me of an analogy I used, which is, if you want to buy a Lamborghini, your practice is doing what it wants to do, and you want to buy a Lamborghini, and you're thinking, I don't want to pay the tax. But if you did, I think if you did 2 Invisalign patients a month, paid all the associated taxes, you would then have enough money left over to then go buy a used Gallardo at sort of like £800-900 a month.
I was in finance.
Yeah. And deposit. I'm not talking cash. I'm talking like, because we talk about run rate at this point.
Yeah.
And then if someone keeps doing 2 Invisalign patients, you've just paid for your Lamborghini. If you want to pay for it cash, then you need to do a bit more.
That's a bit different.
But it's not that much different. It is about 10. All the associated taxes paid for your Lamborghini cash. Now, if you're into cars and you're thinking, can I take it through my company? It's never worthwhile taking an electric car through your company. But if you buy
other than an electric car,
only electric car through your company or a very efficient hybrid.
Yeah.
Otherwise, it's not worth it. But let's say you wanted to get a Porsche 911 Turbo. And I use my uncle.
Are you telling us something here? Are you wanting this Porsche?
I love Porsches. But I got something different, so that's a different beast altogether outside. But I like cars. This is why it's really sort of it's close to home for me. Is if you know, look, tax is unavoidable. You just got to make peace with it. That says, if I can work harder,
I'll move to Dubai.
If I can work smarter and then make the additional income to pay the associated taxes to be left with the product. Now, let's say I get a Porsche GT3, for instance. This might go over a lot of people's heads, but we'll use 2 examples. So Porsche GT3, if I can get one at list, I'm looking at with the toys, bells, whistles, about 150 grand. If I can get one, because they're like rocking horse poop, I can flip it for 300 grand. And I pay no tax on that gain.
Yeah.
Because it's my car. I pay no tax on it.
You've already paid tax on the money to buy it, so you don't get.
And you constantly roll that money in, and you keep buying specific type of car, so it just becomes an asset. Let's talk watches, and I like watches. If you were lucky enough to get a Patek Philippe Nautilus at list, which is 37 grand, you could flip it tomorrow for 120 grand, all tax free. Wow. Now, would you rather pay the tax on the 37 grand, or go buy one for 120 grand?
Yeah.
So there's a whole different thing here that says, as long as you're telling us what you want to do with it, we can show you the best way to do it.
We can do it. And
we can plan it in. And we can make peace with that number. One of the biggest reasons why you would plan, and we take COVID into, is contingency. And if you have to react, what levers can you pull to slow things down? Unfortunately, it means which staff can you lay off?
Or if you're lucky, you might not have to. If you really smashed it and you go, look, guys, we have to do something. We can come to agreements or whatever, or turn off the marketing. COVID, although in America they were doubling up.
Makes sense. It does make sense.
They were doubling up because everyone was sat at home and they were still allowed to work.
Yeah.
So everyone had free time, and the one time they can go out of the house was medical related reasons.
And think about liquidity as well, because the government didn't do what they did, and people weren't traveling to work, paying for food at work, so they had more cash. Which
Work from home.
Yeah.
I hope it stays.
I hope it stays.
Yeah, definitely.
Well, I said I own my own business, so
We're in your office.
yeah. I hope I say hope.
I hope his boss doesn't make him go to the office.
Yeah.
Hold on, it's here.
Asking for annual leave for me is a tough subject because I've been 2 chairs. You've seen the Lee Evans sketch where he's his own boss. I'll send it to you. It's a good one. So that's really sort of the life cycle. Then is as long as that communication happens and you take control of it early and you're prepared to pay for the service because this is the whole different
It's
thing.
above and beyond bog standard accounting.
And this is strategy based. This is a whole different thing altogether.
Yeah.
Which then talks about and you're honest with yourself. Is what do you want to achieve and what are you prepared to do it? Because we can't make you do it.
No.
We can give you the data to help you get there.
Yeah.
We can chivvy you along. We can show you where and it's not a case of here's your numbers, do what you want. The way we do it is we book you in, depending on what package you're on, but it'll be a monthly review. We'll create bespoke packages right at the start that says you tell us what you want it to look, and we'll tweak it and modify it. We'll make it look like what you want it to look like. We'll give you the access to it, and we'll hold you accountable to it. And that can be quite tough when I need to be. But then that's where the relationship comes from.
Yeah.
Because if you think about it, the whole life cycle then becomes you've been doing this for 10, 15 years. At the other end, along the journey, you might not have been married and had kids at the start, but now that
things have changed.
Exactly. Yeah. You have kids. You get married, you have kids. Whether that's culturally the way you do it. So I did it. Is married, had kids. Yeah, I just want to make that clear.
Yeah.
Is you can probably hear him in the background.
The mic's pretty good, so we might not actually have too much background noise, hopefully.
So. It's not. It's a very thin wall. So, and that changes your perception. That changes the strategy.
Yeah.
Because that then changes the exit. That then says I might not sell it.
Your values have changed. Your motivations will change.
100%.
Yeah.
And then that says, well, how do I now make sure there's enough left over to get to them? I mean, we use the Duke of Westminster as an example. He left £12 billion worth of property to his kid and didn't pay a single pound. Didn't pay a single penny tax. Duke of Westminster. I think it was Duke of Westminster. And his kid was like 18, 20 at the time and inherited £12 billion worth of property in London, which has grown to, I think, 18 billion now.
Wow.
So, and again, no tax to pay. So all of this then becomes, if you have that relationship with your accountant and it doesn't become all about tax, assume they're doing that.
Yeah.
Assume as a bare minimum, they're going to do everything they can to make sure you pay not a penny more than you have to legally. The rest of it then becomes based on strategy, becomes based on the structure, becomes based on what you're trying to achieve, becomes based on your goals, aspirations, which are then tweakable.
Yeah.
And I think that's really the key message of today. And it's really what I'm passionate about, which I'm hoping that you can get is coming across.
Yeah.
Is that's the bit of accounting I actually enjoy. And if you think about my qualification, ACCA there's 14 exams that I had to do across 3 years. I think 2 of them were based on accounts and 2 of them were for tax.
Yeah.
What were the rest on? The rest was theory, understanding, strategy, planning, forecasting, everything like that. That says, how do you train your brain to think in a very specific way that looks at process, looks at cause and effect, and then looks at opportunity.
Yeah, it's interesting because I don't think many people actually know this part of accounting exists almost. So it's something that we probably need if you're going down a path of, if you're someone who just wants to sit at home, well, not sit at home, sit at work, go to work, come back, and that's fine for you. Okay, it's not something that's going to be needed for that sort of person, but there are a lot of people who are dentists who they want to be entrepreneurial, they want to do something above and beyond and take their life into a different sort of dimension to the bog standard. So that's something you need, and if you're trying to do it without some sort of good plan and some way of holding yourself accountable and understanding where your numbers are going right and wrong, then you're going to have a headache of a time, or you're going to get very lucky.
Yes. Yeah. And it is the truth. It is the truth, and it's a very harsh way to put it, but it is true. That said, it was fail to prepare to fail.
Yeah.
That's another one to stick up there. So that's another one that says that if you're not, I revisit my plan monthly. I started off with a very different plan to where I am now, because I rapidly realised the original plan would mean I lose the personal touch with my clients.
Yeah.
Everyone that joins us asks, will we get you? Will we be able to reach you? And those are promises I have to keep. Because
so how do you manage to do that?
Exactly. So look, our pricing has changed, which says, look, and I'm quite honest with my clients on that basis, that says, you want these things, I can't do it on
these terms.
On these terms. We've had to review, but then they've appreciated that. It's not a case of I've just sort of fobbing them off and hope they leave. We have a very open and honest conversation.
Yeah.
Because ours is always based on value, because we're built on 3 principles, which is visibility. We want you to see your numbers. The second is communication. You need to be able to reach us to discuss it.
Yeah.
The third is options. And we will give you those. And that's built into every package we create. And we don't offer stages of packages. We offer everyone that. The consultancy side of things is a different thing.
Separate, yeah. Fair enough.
Should
we wrap up there because we're going to end up over an hour 20 otherwise. I think it's probably just about digestible at this point.
Just about, yeah. I think, yeah. Sorry.
No, guys. I'm slouching down there. Let us know if this was helpful. If you have further questions, this was not too difficult to set up actually.
No.
Once we decided where the lights were going.
Yeah.
So we can definitely follow up on things.
Yeah.
So let us know what you think. Send me a message, send Bilal a message, and we'll try and get back to you. Possibly, if we need to, we can resurrect some Hey Bilal stuff if it's a quick sort of answer. Do it as a reel, which, by the way, guys, can you go like and then share? Really useful for us. But yeah, I mean, I think it's been really, really useful to get some of these ideas out there. If it is only actually bare bones, I think there's probably a lot you could go into depth on all of these 3 subjects. But that would then we'd have to set up some pretty fake sort of scenarios down the rabbit hole.
What might be quite useful is if this gets enough traction, is we could probably do an Instagram live where we do a planning session, and just do it. 20 minutes. This is what it looks like, or 15 minutes. Just something quick.
Let's plan to do that because you can do that from anywhere.
Yeah.
Let's do that. We can do that in an evening. Because we're filming this in the middle of the day, so you're all at work right now, guys.
Yeah.
Or you're off because you're working 3 days like me. Who knows?
I'm sat at my home office in a GLA and trackies, so sorry.
Yeah, no, I think this is probably a really interesting and unknown side of accountancy, and something that dentists plus minus other professions need as well. So let's pick it up again for sure.
Yeah, it sounds like a good one. We could, depending on the feedback and everything we get, I'm quite flexible with these things. So let's see what the comeback is.
Brilliant, guys. If you're coming from Bilal's side and Bilal's audience, go over, check out my stuff, which is Dr. Jabir_Kazi on everything, Instagram and TikTok. Although there's just random stuff on TikTok at the moment. Yep. My dentist stuff is on Instagram. Send me endos, send me some implants if you like as well. And then I'm also doing a lot of sort of these kinds of things with other people as well. So there's a whole host of interesting videos on YouTube, which can be anything from finances to how to do treatments. We've got some really interesting case studies and case presentations. Check those out as well. Bilal, do you want to push your stuff onto them?
A neat little segue to plug. So we're on all platforms at HeathHillGreen. So that's HeathHillGreen. Check us out. If you like what we're about, feel free to drop us a comment, share, comment, like what you see. And if you're wanting to take any of this information further and want to see what it's about, you can book into our diary using the link tree in my bio on my Instagram, or you can inquire on our website, which I promise will go live at some point, but there is an inquiry form on there, so that's www.heathhillgreen.co.uk. But feel free to reach out. So you can drop us an email at ask@HeathHillGreen, but we'd always love to hear from you. So that's how you get a hold of us.
Brilliant. I should say the other thing I'm doing a lot of is speak to people about who are trying to move away from NHS dentistry. So I have thoughts and ideas there. So if you're someone who's looking to do that, doesn't know where to start, hit me up. I have plenty of ideas. See you later.